Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, September 15th, 2025. Another decent day for the Bulls. Again, I put it in the morning notes that typically when we head into, there's certain times that the Bulls really like to, say, stick it to the Bears. One is as we're heading into a long weekend, a holiday week, they like to take the low volume and just grind price higher. And then as we head into Fed meetings, and what they do is they basically just kind of make the Bears sweat it out going into the actual meeting. And right now, or the decision, and it's pretty much well known. It's priced into the market that we're going to get a 25 basis point cut. The surprise could be does a 50% a 50 basis points cut, but honestly, that's already priced into the market also. So once this is behind us, what I've been saying is, they could really just kind of run the markets and make everybody believe that this is the only thing the market was waiting for to move higher. And then when we come into the week after, reality sets in that this has already been priced into the market, and valuations do matter. And then from there, they remove the bid, and everybody that's chasing the market at the highs are then forced sellers. So I can see something like that happening. What, like I said, the we could see an initial follow through to the upside, and what that will do is just make everybody believe that everything is safe to jump into the waters. But we have sell signals on most of the charts. I just think that it's the Fed meeting that's really the decisions going to hold the market up, and then from there, that's when they start playing games with the with traders, and that's where I do believe that they will start doing some backing and filling. So we have some bearish divergences. I like to see it more like this when it comes down, up, and then we make a higher high. Those are usually when the bigger drops happen. So we could get, again, we could see this start to rise, and then from there form the bearish divergence, and then we get some backing and filling. But really, just looking at the charts right now, the bears have their work cut out, because the first thing they're going to have to do is get it through, say, this low right here, or this little resistance support zone, and that's at the 65.30. If they can do that, that's where I believe that we can make a move somewhere down into this into the 64.80 area, or test the 200-day moving average. That's just a shallow pullback. If we're going to get a bigger one, then that's where I see us coming down and testing some of these lows. And like I said, I do believe it's coming. It's just a matter of where. And as I said, we've been going when I went neutral on the S&P. I started buying the regular I'm sorry, IWM, instead of using the spiders or the S&P, and that's done very, very well for us. Now, we see the small cap set, they're getting their runs, but for the most part, they're not really, as strong as they should be. So what I've been doing is switching over to the high momentum stocks. So you have your Amazon, CRWV, IREN. Those are the ones that move up in bunches. And what I've been doing is simply going long those stocks. They did pretty well for us today. The CRWV was up $12. We bought the calls on Friday. Amazon was up today. Adobe was up and then it reversed. Those are the types of trades I'm making, where we opened up, we had we were short spiders just in case anything dramatic happened over the weekend. We wanted some protection. Those are pretty much wasted. We took a hit on that, but the CRWV, those alone, we started buying those at around 105, and it hit 121 today. So that worked out well. Amazon worked out well. Adobe, we had to get rid of right away. I'm still holding it, but I kind of wish I would have. And then, so that's really what we've been doing. So this is the part that makes me very nervous for the Bulls. And this is these bearish divergences that have really been taking place since May, and they've been ignored. We've had some little pullbacks, but this is going to have to play out. And for that to happen, it's going to be more than just a 1 or 2 day drop. It's going to be a 2 to 3 week drop. And as I said, I wouldn't be surprised to see the S&P. Well, obviously, this is going to be the support zone. Once it hits, that's going to be right around that 61.72. And then we have the 200-day moving average at 6,000 right around here. But a better type of retracement would be a 50% retracement, brings us around that 57.18 level. So when that happens, it could start sometime next week. It may be October. It's tough to say. But these sell signals are there. They're always ignored, and they're ignored until they're not. So this is what has me a little bit nervous with the bulls right there. So hourly chart, again, we could see some bearish divergences if we come down, maybe close the gap that we had today, 65.95, and then head higher. Looking at our just options part of it, you can see 66.50 is the options. There's a bunch of, it's a call wall up here. And then on the downside, we have support at the 64.92. So if the bulls can get it above the 66.50, that means the dealers are going to have to start buying stock because they're always neutral when they start selling the options. So that would be the force to for them to start buying this stock to go into neutral, or we come up and come right back down again, and this is where it closes. On the downside, 64.95, but then we drop down to the 6,400 and 6,300. So these are your put walls. This is where support will be. This is your call wall. This is where resistance will be. If it gets above it, then we're looking at 6,700. But like I said, this is going to be pretty important right there. So if we take a look back at the S&P, here you can see just a 23% retracement. We're going back to 65.60. That's also going to coincide with the 200-day moving average if it gets up there. So this is probably where buyers will be waiting. You can see it's also another little set of option support right there. That's this green line right here, and this is the resistance. When it's above it, it's used as support. When it's below it, it's used as resistance. And they gapped above it and then used the moving average to hold things up. But again, we have bearish divergences on the 15-minute chart as well. And if the bears can get it through the 65.80, that's where I anticipate us coming down to the 65.50. So that's the short-term move on that. Upside, like I said, today we had the gap up. I didn't even put this in the room because it was just it was an expensive trade and it was risky. But I sold the S&P calls. We did pretty well with it because we already were up on the CRWV. So overall, the portfolio had a good day. As you can see, we closed up 2,500, 2,550. So it was a good day, but a lot of that was just really the carryover from Friday with our options positions because we had the CRWV and we had the Amazon. And then I just really, like I said, it was a small position. I sold the 6620 calls for the S&P, so it was right at the money. Got a good premium on it, but I had a small position, so things worked out pretty well on that part. So again, this is what the bears need to get through 6,600. If they do that, that's where I anticipate we get a move down to the 65.50. So that will be a decent little trade. If it happens tomorrow, this is where I believe buyers will be waiting as we head into the Wednesday announcement. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys.